Good morning and welcome back to the Opportunistic Trader for October 9th, a Tuesday, non-expiration day. Volatility is picking up a bit. I see the market already bounced $8 since we were about to go on 5 minutes ago. So once again, the team of Plunge is in there saving the market at this point. One of these days we're not going to hold up. I don't know if it's going to be today, but we've really gone 4 days with almost the same trade where we traded up and down and then cracked down and then somehow rallied 20. Yesterday was 27 handles out of the air. Today, actually, it was probably almost 30. And the day before was 22 and the day before was 25. So, I would expect nothing less. But one of these days, we're going to go out on the lows. I want to just briefly touch on Asian markets were lower. Actually, the Shanghai was slightly higher, but overall the Nikkei was down 1.5%. It's hits pretty significantly off its high. It was rocketing. It's back to pretty much unched on the year. It was up about 8%. So that market is down, and the Hang Seng is floundering down double digits on the year. Going across the pond to the European markets, the DAX is the story of the day or the year. It actually just bounced about 50 points off its low. It actually took out the yearly low today, which would put it down about 9.5+% on the year. And from the highs of the year, I would think it's almost in bear market territory, which would be 20%, but it's down 9 on the year. And I think maybe at the peak it was up 8 or 7. So we got up to like 13,005 and we just traded 11,009 or under 11,009. So that's a pretty big move. Our market's mystifying. We're still up 7.5 to close to 8 on the year on the S&P. Nasdaq's been coming in. I think Mike had said to me it's only up about 11 or 12. It was up almost 19. These markets are in jeopardy here of really correcting. I just don't know why every day they come in and save them. So, we gotta, it puts like something in the back of your head, like that little devil that pops up, and you just have to be careful of that. But that's probably the time where you want to utilize options, because the option premiums with volatility ticking in the 17 handle, yesterday almost got up in the 19 handle. At least there's some premium. But one thing I'll say, and I've said it for years, and I really truly believe it, when volatility is 20, it's probably too low. When volatility is 11, you can't buy it. That's sort of the mantra here. If we have a significant wave down, if we take out the low, what was the low yesterday? 66? Yeah, so we were about 8 handles from the low. Now we're about 13 handles from the low, but that's really not very much. If we take that low of yesterday out, I mean, it could free fall down. So, we'll keep an eye on that level as the low of this move. But overall, the market somehow hangs in, but NASDAQ looks weak in general. Today, the S&P is down a little bit more than the NASDAQ, so maybe today, out of the gate, you'd probably want to maybe buy NASDAQ and sell S&P, or look to see how that stuff is doing. Apple's been a great day trading stock. It moves $3 to $4 a day. You can really scalp in there pretty well. It's down it got down to 120 yesterday. It's interesting, if it goes back below the $1 trillion market cap, which is only about 60 billion from here, I think everybody that's been in it for the last 2 to 3 months has been losing. I think people are really losing here. It's sort of, I'm seeing it in all these stocks. I mean, Micron is back down to a level where I like to buy it at 40, 41, 42. Got up to about 47.8 on that. Twitter looks terrible. Tesla broke the yearly low yesterday. Actually, it broke I think the yearly low at 149 and change. But I don't know if that's a year-over-year low, but Tesla looks terrible, bouncing today up about 2%. But overall, the emerging markets are getting hit again. These things are all on low ticks. FXI is at 40.30, low tick, and the EM is at 40.48, and it's getting slammed. So we're right now, they keep giving you the mantra that we're the best house on the bad block and all this stuff, but you know, I don't know. It seems to me like we're overdue for a correction. I think it's coming, but you got to trade cautiously because you could get like what happened yesterday at any point in time. You get these 20-handle rallies out of the air. And yesterday was interesting too because at 2 o'clock, when the imbalance is off the floor post, we don't like to post the imbalances till after 3 because a lot of times they're not real. But they sat with $1 billion to buy from 2 o'clock on, and then it went to like $1.9 billion, and then it actually almost paired off on the close. It's like people trade off these imbalances, you know, and they jammed up the market at the end of the day. I don't suggest that as a vehicle. Sometimes it works, but very rarely. You could really get messed up by looking at that indicator in general. So, you know, we saw that at 2 o'clock. We were, you know, not really paying much attention to it, but I guess maybe that had a little bit to do with the rally. But it's the same trade. It was the same trade Monday, Friday, and Thursday, and part of Wednesday. So we'll see today if we get down in those lower levels. We'll see if we could take those levels out. But we'll, you know, we'll be watching right now. We have no position. We were going to buy oil on the close. We were so jammed up with some other stuff that we didn't focus on it. So we ended up not doing it. That would have been a nice winner for everybody. Hopefully people did that because that was the plan, but we strayed from the plan for some reason. Overall, bonds came in lower last night. They're actually higher by 6 ticks. They were a half a point lower. Yields on the 10-year actually traded 326-ish, but now they're back down probably in the 323 area. So we're safe. The 2 basis points means a lot. So as long as we don't get that close above 3 1/4, everything is okay. Interesting mantra today. The broad markets just across the world are getting slaughtered, and the Nasdaq's really not down too much. It's only down 30 points, and the S&P's down 13. It was down 18. So we'll keep an eye on that. As far as straddle pricing, the straddle at 80 is trading at wow. The 80 straddle is $25. I love that. That's a whopping straddle right there.
Markets are starting to move.
Yeah, it's that's a big one. I will just say that's a big number for a straddle.
We have 2 days, and yesterday, if you take a look at even just the afternoon price action, we bottomed at 66, rallied back up to 90. So that right there was.
No, I'm not disagreeing with that, except that we're at 80, and we're always, you know, like it's kind of like I'm not going to look at the British pound, but I'm sure it's at 130, and there it is at 130.50. So it's the same thing. Yeah, it goes to 129 and back to 131.5, but it's always at 130. And right now, the S&P, yes, we are moving 30 handles, but we're going down 30 and then back up 30, and then, you know, the S&P is barely down 1% for the month. I think we started the month at 29.20. We're down 40 points. That's not even 1.5%. So we really haven't started to move. I do think we are going to move. I do think volatility is going to come up here. I do think there'll be opportunities. We're going to hopefully capitalize. Oil is up today.
I'm just pulling up some month to date because you just mentioned it. The Nifty 50 is down 10% month to date. The Italian MIB is down about 6%, but then getting more here. So Nasdaq, like you said, month to date, Nasdaq even is only down 2.5% right now.
And
That's not including today's actually move. About
Right.
Closer to 3%.
Right.
FAANG down 1.4%, 1.6% Kospi, but everything's down a bit month to date. It has been an ugly start to the month, and like you said, it's more overseas right now than here. But
It's not, nobody is panicking. It's funny. I actually got a call from someone yesterday, and they were like, sort of on the lows, and they're like, when is anyone going to sell? And I literally responded to him, never, because everybody's conditioned not to sell. So they'll hold. But what might happen in here is if the market does trade off another couple of percent, now we're going to be 3-4% from the high. Then, we'll only be up 4 or 5 for the year. And that puts everybody in a losing position. And the only reason why people sell is because they have to, or they're losing too much. So they haven't had to do that in 10 years. So they probably don't remember how to do it. And it'll be interesting to see, if volatility picks up, or if today's opening could be good. Market's only down 13.25 now, which is not very much. But overall, it looks skittish. And if we go down today, back into the lower 70s and even into the 60s, they're not bringing them back today. Although I said that yesterday and they did, but they're not bringing them back today. So we'll keep an eye on that.
Also just looking at the energy market, it'll be interesting to speak with Bryn, get her take on things. Natural gas continues to move higher. She was on a similar sort of trade that Mark Fisher had. She was talking about it as well. Once nat gas starts to break above 3, that it's worth a move higher. And we've had an explosive move here. We're 330, so we've had about a 20% move in nat gas over the past 3 weeks. Crude, like you said, has been trading supportive. I think nat gas, part of it is tied to this storm that's brewing in the hurricane that's going to be affecting the Gulf over the next 2-3 days. But it's like one of those where, it gets into an uptrend and it looks for any sort of catalyst to, move higher. People are hedged. They start selling calls well in advance, and then they have to scramble to hedge. And so I think that's part of what we're seeing. But nat gas traded as high as 336 overnight, and right now we're up 5 cents at 331. I guess that they're on high alert there. Looking at FX, similar to yesterday, dollar, we walk in, dollar stronger, euros at 114.44. The pound hasn't moved from exactly where we were talking yesterday. It's at 130.60, but it is down 30 pips on the day. Dollar yen in Asia traded down below 113. We're right now at 113.25, so it's really flat on the day, but early on in Asia was under pressure. And dollar CAD right now exactly at 130. Dollar CAD's been a hot topic recently. They've been talking about, that new deal with the U.S. and Mexico, but that traded below 128 when that news came out, and here we are back at 130. So, sell the news sort of thing there.
Yeah, I don't follow the dollar the way you guys do, and I appreciate that you do. I don't see much. People freak out when the yen goes from 111 to 113. Risk off. I remember trading the yen, and it moved basically 20 big figures in 15 minutes. So, moving a big figure to me is, it's important, but it's not.
Yeah, implied vol, especially in G10, is very, very low. Even euro, if you take a look, it's not moving. 45 pips. We've had less 1% moves in G10 FX than we've number of years. It's a lot of small moves.
Yeah, I remember back. God, I'm going to tell you the year because I do remember it. It was 1996, and the Soros came in and basically saved the market, and the yen moved like 25 big figures in one night. And the euro used to move like 4. So, volatility's been contained in there for a long time, and people like risk off when the yen is at a price, and then risk back on, and it's literally $1 from where it was. So But these things move, and then what was the currency that took everybody out? Was that the Swiss currency?
Yeah, Euro Swiss.
Yeah. So
They held the peg below 120, and then they let it go, and it traded down to like 88 in
Right.
about 20
and it's
minutes.
probably back to 130. I haven't looked at it, but it's probably somewhere in that area. The whole thing was to blow people out of positions, and they actually did a great job.
Back to 113.
Yeah. I commend them. So they took the speculators out, and
I just pulled up the chart for everybody to see on the right-hand side. So this was the very first few days, January 5th, it looks like 2015. It was trading, the S&B was holding it above 120. They had literally a floor, and they wouldn't let it trade below. They removed it, and in a matter of minutes, we traded down. Actually, on this chart, it shows 84. So, I mean, that's a historic move. And then, it was all over the place. Liquidity was just a mess. And there's actually a few funds that were blown out. Many funds. There was a big emerging markets fund down in South Florida who lost billions. They were a $3 billion fund, and one of their funds went deficit. They had a number of different funds, so not all of them went deficit. But
no, I think they blew the whole funds, all the funds.
Well, they had multiple funds, and they eventually had to close the firm. But I mean, that was the example. They were selling puts, and it just completely, with that move, where they liquidated them and everything, some of the negative.
Yeah,
so
but that's what they do with positions. They did that, in volatility in February. They knew everybody's positions, and they took people out. So, you always have to be, unfortunately, leery of that.
What do you think of? We were talking about it a little yesterday. The VIX right here, because we were just talking about it. VIX cash right now is 1692, whereas the future is 1630. At one point yesterday, VIX future was above VIX cash.
Nah, not yesterday. That was yesterday was under pretty much all day, and then the last couple of days, I don't know if we're getting close to expiration. It may expire next week. I don't get it, because when we were looking at it, it was 20. Was literally the other way, 20%. So the VIX was trading at 11, and the volatility future was 14 and change. So, seeing that was pretty unbelievable. And now it's going the other way, which means they don't think this move is going to sustain. I don't know if it will or it won't. That's going to be decided at a later date. I kind of like this opening that we bounced off the low. I think you could probably sell some strength in here, maybe utilize options, do some call spreads on the short side rather than maybe hit the futures. But the bigger returns obviously are if you do futures. You'll capitalize significantly more. So, we'll keep an eye on the E-mini. It's only down 12. The NASDAQ rallied back about half. The low in the NASDAQ was 37. It's 25 off the low, and it's only down 27. So they've contained us once again. I don't see much of move in the stocks.
Looking at the markets here, Larry, you're a range trader. Yesterday you had some really good trades. You were able to take 7 points out of the market a few times. Vol's picked up, like you said, the straddle's trading about 25. Like, what are you going to be looking for? Right now we're trading down 12, but like you said, we're about 8 off the low. What would you be looking for your first signal? Like, what would make you buy?
I'm looking to sell. Well, it's hard to get the signals because obviously you can't look at DAX. You can't look at bonds. Bonds are irrelevant. Whether they're up 10 or down 10 is irrelevant. It's just market action, the fluidity of the market, option pricing, seeing sometimes watching and seeing when calls are bid versus, when they want to buy puts. I could look at the screen and see just bids, on the call side. It means the market probably will trade up. And, for me today, though, the mantra is I'd like to sell some strength. I hope they bounce. I think the market could fail in here today hard. I don't know what they're looking at to trade it today. I don't know why, when we got on, we were 5 handles lower, and then we were another 2 or 3 handles lower right before that. I couldn't tell you why. I think it's just stocks and, maneuvering around. But I do think that the market is a bit weak. I'd be a buyer of other markets against our market. Obviously, that has not worked yet, but as far as DAX, that's probably underperformed by 4% here. So maybe buy some DAX and sell some S&P. You'll have to sit in it for a little bit. But as far as like what I'm looking at, I'm looking at the equities. I'm looking at other foreign markets. I'm looking at pricing on crude. But to be frank, it's hard to decipher what the trade really looks like because it's just programs. I mean, yesterday we were on the low and we keep making the low around 1 o'clock and then exploding. I don't know what yesterday's action was. I don't know who needed to buy the close 30 handles above where we were 2 hours before, but I guess it's all quantitative machinery. So you have to respect it and sort of stay out of the way and let it do what it does. And in a nutshell, the answer is you got to pick your cue for what you think the market is looking at. And right now we're only down 11 handles. It's nothing. This is like mid-range from yesterday. So we were at the lower end. We got down to 74 and change. Now we've rallied, half the down move pretty much in NASDAQ and almost half the move in S&P. And once again, we'll probably be in for a quiet day unless we break down. So that's what I see as far as what I'm looking at.
Like you said, also looking at the individual names, I agree with what you're saying. The NASDAQ futures are down 0.4% right now, but looking at the names like Facebook, Apple, Google, the typical big names, it's down small, down 0.25%, but nothing stands out as a big loser.
But they can maneuver all that quickly. Like absolutely. Yesterday on the opening, Apple was down $1 and then it was down 4, literally in like a minute and a half. So all of this stuff is. What do they say? Tomfoolery. It's just to fool you, to say, wow, maybe I should buy here because the stocks don't look down that much. And sometimes it works and sometimes it doesn't. That used to work like a charm. I could look at the board and be like, this is what it is, and be able to say, I'm going to buy this opening because there's no way the market could open here because the stocks don't warrant it. But overall, the bottom line is they can fool you. So right now, in my mind, you're being fooled. Like we're looking at it, we're like, oh, Apple's, well, they can move Apple points, in minutes. So be careful when you look at the pre-opening stuff. It works, but it doesn't work too well.
What else are you thinking? It looks like ags are pretty flat. We'll get an update from Joe in a few minutes on that, on the overnight activity, but those have been relatively quiet actually after a very volatile Q2, Q3. Gold had a huge move yesterday, and right now it's up $1. It's funny. It ran through some key levels. I guess it was last week it had a big up move. I think taking out some stale shorts, ran above 1210, but we failed on that, and we're back to 1190. I know Vince is out today. He's doing some other things, but he'll be back tomorrow with his gold fix. But right now, gold is 1189 at the lower end of the recent range. We've really been stuck between about this level, 1185 and 1215 for a month and a half now. So we're up $1 there. Silver's up 2 cents, really doing nothing. Copper is flat, down tiny at 276. It's interesting. Energy is really the interesting one because that's been the story of the year. Crude trading higher, despite global risk-off environment, and we have it up higher again today. We're trading just under $75. And we had that one day earlier last week where we traded up to 77, then came off hard, but
yesterday it was 73 and a quarter, I think.
Got down to low 73s.
And now we're all good. So must be that every time they mention the word hurricane, they think it's like
buy anything energy, buy it all.
There's a hurricane hitting in Tahiti. Oh, you better buy it. It might come here. So it's the same mantra. They basically buy every time that there's a hurricane and then nothing happens and then they sell it off. Today's going to be interesting in crude. I'm surprised that it's so strong. I'm surprised that the S&P has retraced 3/4 of the down move, in 20 minutes. I'm surprised the NASDAQ is about to go positive after being down 50. What turned us? It must be some news. Oh, I forgot it's not. It's just a bunch of computer algorithms going crazy trying to, buy or whatever. But this is a better opening, potentially to sell. Volatility, it just doesn't make sense. The volatility is too high, I think, for right now for what we're doing. I mean, we're just nowhere. I mean, the S&P is down basically 1% for the month, and who knows what'll be today. So it might be flat on the month or down 50 basis points, and to double almost the price of volatility is crazy. But I guess people are under hedged, and we have to figure out what that is. But since we started speaking, the S&P went from 79 to 85, and it doesn't seem like a lot, but it's the same. What it does is it takes the sell pressure out. So when we're down 18 or 19, everyone's like, oh my God, do I have to hedge today? Do I have to sell? And then all of a sudden you come up basically $7, and not only, we're 11 off the low, nobody wants to sell now. So you have that mantra. Oil is ticking back up, I guess, with the S&P. I don't know why that's relative, but overall, it looks like now we're going to have a very quiet day unless something crazy goes on. I would be a seller of strength. I've said that before. I don't know where we stop. I'm happy I didn't sell yet, so I'm waiting. Maybe we'll put an order in at 87, 87 and a half, 88, which is amazing that we're back at that area. People get rewarded by buying, so you just, you have to, keep that in the back of your mind. And
well, with VIX up here, just like yesterday, you had some really good trades. I think today there will be a lot of good trading opportunities.
We're gonna do really well today, especially we're gonna sell off the opening. I'm just hoping we hold in here, but overall, the market's just amazing. It's the vol is too high. The price. Listen, we were looking at the 80 straddle was $25. Now that 80 straddle is $22, $23. Came in like $1.50, and the market, moved $5 or $6. Because really, the straddle is just downside protection for these guys. What they have to pay to buy downside. So we'll keep an eye on everything. We're gonna put on a. We'll put on a short at 87. So we'll be out there at 87 on the S&P. And other than that, I don't see much else. The stocks aren't telling a story. There's not one individual name that looks like it's going crazy. The euro is pretty crappy.
Trading back down, not an aggressive move, but definitely trading lower. We're 14, just below 114.50. So today's schedule, we're going to be on a bunch of times, talking about the market, so especially with volatility higher. But at 10 o'clock, Tracy Schuchart will be joining us, and then we're going to be back on at 11, and then Tom McEntee is going to be joining us at 1 to go over his recent trades, good risk-reward opportunities, things of that nature. Tony Greer is also going to be joining us in the afternoon. So, a lot going on. Volatility is higher. I think, we're going to have a lot of good opportunities out there. Larry will update everybody. Also wanted to let everybody know, yesterday was the first day we really were texting out all the trades. I think we missed one late in the day. But if you are not receiving text messages on every trade that Larry does and you would like to, email info@theopportunistictrader.com. and vice versa. If you are receiving them and do not want to, and you have replied and you're still receiving them, they should stop. But if they are not, email info@theopportunistictrader.com. But yesterday, Larry had 4 trades posted, and like I said, we texted 3 of them. The in and out. So that was 6 text messages. So let us know if you're not receiving those. But we're finding a lot of people like that feedback, that they are getting that real-time alert. Because they might not be at their desk, they might not have it in front of them. But yeah, that's kind of what we're up to here. It looks like a very slow economic data day. Not much out there. See what news comes out. Anything else to add over there, Larry?
No, just gonna watch the tape. I like to sell strength. I hope we open in here. I think that if we get below 75, we could get acceleration. I don't expect that, but it's just shocking where these other markets are and how we just ignore it. So we'll keep our head up. We'll look for opportunities. I feel pretty good. Yesterday was a good trading day. I feel, we're flat, so we can really look at the tape. Want to wait for the opening, which is in 27 minutes, to see where the stocks open, and hopefully today will be a really good trading day. But again, it looked good about an hour ago, and now we're back in line. So we'll be back to you sporadically during the day with observations and thoughts and positions and whatnot, and then in the chat all day. And we'll be back to you just after the opening. Good luck to everybody.